Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Welcome to the Saturday, March 21st, 2026 edition, the Week in Review. Today, we step back from the daily signals, look at what our BuzzPulse social intelligence data told us this week, grade how well it read the tape against actual price performance, and set up the names and themes you need to be watching when markets open on Monday. Let's get into it. First, the week's defining theme. This was a geopolitically dominated tape from start to finish. The Strait of Hormuz crisis was the undercurrent beneath every session. Crude oil opened the week near $98, punched through 100 on Tuesday, and finished Friday still above 95, as Saudi officials warned Brent could hit 180 if this drags into April. The S&P 500 closed Friday at 65.06, down 1.5% on the session. The NASDAQ dropped 2%. The 10-year Treasury yield climbed back to 4.39%. Gold pushed above 4,500 before pulling back. BuzzPulse collective sentiment across the top 20 assets never broke above 0.21 at its best and closed Friday at a tepid plus 0.08. The data said caution all week, and the tape confirmed it. Now, let me walk through the week's biggest signals and grade how they played out against actual price moves. The single loudest name across the entire week was Meta Platforms. On Monday, BuzzPulse flagged Meta with a Z-score of 6.9, while the stock was falling 3.8% on reports of a delayed AI model announcement and layoffs. Sentiment was negative. I told you that Buzz price divergence was the number one signal to watch. Well, here's how it resolved. It did it. Meta closed Friday at $593.70, down nearly 3% for the week and almost 8% over the last 30 days. It is now traded below its 200-day moving average since Halloween, the longest such streak since 2022. Social engagement surged 158% week over week, according to LunarCrush. But all that attention did was process bad news. Massive volume plus negative sentiment plus falling price. BuzzPulse graded this correctly. The crowd was not accumulating. The crowd was watching a stock in trouble. Meta is now down 25% from its all-time high. The cleanest equity signal of the week came from Palantir. On Thursday, Palantir scored a Z-score of 2.4 with positive sentiment of plus 0.25 and what I described as the highest setup quality in the entire run. Multi-source confirmation, aligned thesis, source diversity across channels. And here's what the price did. Palantir rose 1.9% on Thursday alone, closing at $155.68. It finished the week up roughly 11% from its recent lows. That is a textbook example of what clean social signal quality looks like when it translates to price. Moderate attention, positive conviction, price confirming, not the loudest signal, but the cleanest. Friday brought the most extraordinary Z-score I have ever reported on this channel. Micron Technology printed a Z-score of 14.7, nearly 15 standard deviations above its 30-day baseline. And here's the twist. Micron reported blowout earnings this week. Revenue nearly tripled year over year to $23.86 billion. Earnings per share came in at $12.20 versus the $9.19 estimate, a 33% beat. The CEO said memory chip supply is tight and they cannot deliver enough to customers. And despite all of that, the stock fell 4.8% after earnings, closing around $422. That is the divergence I was flagging. 14.7 Z-score, record revenue, record margins, and the stock still went down. Why? Because the market is worried about peak margins and capital expenditure commitments. The social crowd was excited. The institutional crowd was cautious. When the two forces collide, you get exactly this kind of coiled spring. That divergence is not resolved. Amazon sat at a Z-score of 6.3 on Thursday with contested sentiment of plus 0.11. The dominant narrative was bearish. Margin compression, job cuts, insider selling. I flagged it as a crowded name with low conviction despite sky-high attention. Amazon is now down roughly 20% from its all-time high, trading back to November 2024 levels. The data and the price aligned, enormous social noise, no directional conviction, declining stock. Now let me shift to crypto because the biggest story of the week did not come from BuzzPulse. It came from Washington. On Monday, the SEC and the CFTC issued joint guidance formally classifying 16 crypto assets as digital commodities rather than securities. Bitcoin, Ethereum, Solana, Cardano, USDCX stablecoin launching natively, Layer 0 integration connecting 180 assets, total value locked across 500 million ADA. Social dominance surged 73% week over week. On Monday, ADA had a Galaxy score of 73 with an extraordinary AltRank of just 10. By Friday, Galaxy score was 53 and AltRank had fallen to 263. But here's the price. ADA is at 26.6 cents, essentially flat for the week, up less than 0.5%, down 2.3% over 30 days. Despite all that institutional grade news, the token has been flipped by Hyperliquid in market cap rankings. Enormous fundamental progress, minimal price response. That's a pattern worth watching because either the market catches up to the news or the news was not enough. Shiba Inu was the crypto standout of the week for a very specific reason. On Friday, BuzzPulse flagged SHIB with a Galaxy spike alert and high urgency. The catalyst was real. The SEC commodity classification created a potential path to a spot ETF, and T. Rowe Price filed an amended SEC registration for an actively managed crypto ETF that can hold 5 to 15 digital assets, including Shiba Inu. LunarCrush shows SHIB at a Galaxy score of 56 with an AltRank of 12. Top 12 across all crypto for social momentum. SHIB is up 2.6% in 24 hours and essentially flat for the week at 0.00000596. Trading volume surged 168% over 3 months. That is institutional level recognition meeting retail enthusiasm and the first real buying pressure in weeks. Whether it sustains depends entirely on whether the ETF narrative continues to build. Pepe rounded out the crypto week with a fascinating disconnect. BuzzPulse flagged Pepe with a Galaxy score of 75 on Friday, and both our system and LunarCrush were pointing at it simultaneously, a convergence signal. Social dominance surged 299% week over week. Engagements jumped 250%. Sentiment is 92% positive, but the price tells a completely different story. Pepe is down 19% over 30 days. Trading volume is collapsing. Open interest is below $180 billion. The token sits at 0.00000034. The crowd loves Pepe. The money does not. When social enthusiasm is this high and price action is weak, it usually means one of two things. Either a massive reversal is building underneath the surface, or the crowd is delusional. We do not know which one yet, but that is exactly the kind of signal BuzzPulse exists to surface. Now for the setup watch, what you need to be monitoring heading into next week. Number one, Micron remains the single most important name to watch. Record earnings, 33% EPS beat. Stock fell 4.8% anyway. That 14% 7 Z-score with institutional caution is the latest divergence between social excitement and institutional positioning that BuzzPulse has flagged this year. If the semiconductor narrative shift even slightly positive over the weekend, Micron could snap higher fast. If peak margin concerns deepen, the downside could accelerate. Either way, the move will be decisive. Number two, the broad market divergence is at extreme levels. Friday's run flagged 21 assets simultaneously on the divergence watch list, the largest cluster this cycle. SPY, QQQ, DIA, and SOX are all showing social attention misaligned with price. The S&P is down 1.5%, NASDAQ down 2%. When divergence is this widespread, the resolution comes from a single catalyst: any Hormuz headline, any Fed commentary, any weekend geopolitical development. Number three, the crypto regulatory framework. 16 assets classified as commodities. T. Rowe Price filing a multi-asset crypto ETF. The Crypto Clarity Act reportedly 99% done, according to LunarCrush Social Intelligence. Watch Bitcoin's $70,000 level. Bitcoin held it all week despite oil above 95 and equities selling off. If BTC holds 70,000 through Saturday night's Asian session, while the macro backdrop stays negative, that is a meaningful show of crypto resilience that has not been priced into the broader narrative yet. Number four, the energy complex remains the macro wildcard. Crude above 95. Saudi warnings about $180 Brent. If weekend headlines show any cooling off of Hormuz tensions, oil could reverse lower quickly, and the entire tech sell-off narrative could reverse with it. One geopolitical development could change the direction of several major market themes simultaneously. Let me give you the final scorecard. BuzzPulse correctly identified Meta as high attention, low conviction, and the stock fell 3% this week. It correctly flagged Palantir as the cleanest equity setup, and Palantir rose almost 2% in a single session. It caught the Shiba catalyst with a Galaxy spike alert before most retail coverage picked it up. It surfaced the Micron divergence at 14.7, and Micron's record earnings beat, followed by a price decline, proved the divergence was real. The Pepe convergence signal correctly identified massive social acceleration, but the price data warns that enthusiasm alone is not enough. Social intelligence does not predict price. It tells you where attention is flowing, how the crowd feels about it, and whether price confirms or contradicts that narrative. This week, BuzzPulse read the tape correctly more often than not, and the signals that have not yet resolved, Micron, the 21 asset divergence cluster, and the Bitcoin 70,000 level, are the setups that matter most heading into Monday. I'm Ken Carpenter. That's Invest AI Savvy, and that's the way it is.